Hey, buddies, Bob Trade Genius, the 2nd of May. Gosh, where time fly. Sorry, no videos over the weekend. Had too much to do, and family came in, and it was just wasn't able to make it happen. But I want to show you guys two things. It's not going to be a long video today because these are only two things that really matter. Here's the chart of ES, and as you can see, for people that can't see this, I'll describe it. But people are watching it. It's been plainly obvious that we've had a market correction basically the entire month of April, and it's just been incredibly painful for everybody in terms of just unrelenting selling. Well, today we had a hammer put in, and that is where you have a really long wick down, and then you have a small head or candle or body near the top of the wicks, and we're getting a bit of follow through overnight. And I mean, this move today was pretty big. It doesn't look big on the chart, but it's big in the scheme of things. And what happened was on Friday, we went ahead and we tested what's known as an inverted cup and handle. So you have a handle on the left side, and you can see the buys and sells in the pivots. And then we've had a sell up top. And now we're coming down and trying to see if we can make a pivot low here. But we broke through, tested it, and rejected it. So this inverted cup and handle is still valid until unless the 21 EMA is breached, which is for those who can see the chart, it's all the way up at 4296 area. We have to breach that and start making that support versus resistance. And then we could say this inverted cup and handle is broken. If not, it's just an extension of the cup. And we still have a date with basically another 12.5% down to 3578 area. It's not the only thing. There's also a head and shoulders pattern that takes you down to 3400. And there's a Miyagi, which is, we call it a Miyagi. It's where you had a ghost print that took it down to 3850. And there's other people out there talking 3650. So there's a lot of confluence in that area. I think at any rate, regardless of what the Fed does, whatever move we get higher is likely to be sold into because we still need to sell more. The market is overvalued at the level of the 10-year, and it's overvalued at the level of oil, and it's overvalued at the level of inflation. And I think the next quarter, we're going to see the earnings reports, we're going to see the issues start presenting themselves big time in the earnings reports because companies, they may be able to raise their prices, but they're getting demand destruction. And what I'm hearing from listening to the ports of Los Angeles, Long Beach, talking in 6 to 8 weeks, they're going to be caught up on their backlog. And China has slowed down sending us anything. So don't know if that's medical or if that's political, but there's issues there. And it's something to keep an eye on. And also, Xi had an emergency meeting of their banks to talk about how to protect their assets for a sanction. And so they might be up for something, or they're worried about us escalating as well. So just keep things in mind here as we move forward on that. But that's in the future. Who knows what those people are thinking? He could have other issues to resolve. And I'm going to show you one more chart here that is very interesting. One that you should set up on all your charts setups. It's basically the VVIX over the VIX. So you can do these ratio charts. You can do them in many of this Trading View. You can do it in Thinkorswim. But basically, it's the VVIX, which is the volatility of VIX, that is on the numerator, and the denominator is VIX. This is a daily. And I just want to show you here is we started to get a move about the 16th of March that turned out to be the precursor for the big sell-off we had. And so we started selling uh, at the basically April 2nd, and that was where it topped, and it broke down about the 10th, and we've been falling ever since. So the volatility and the VIX needs to now turn higher. And once that starts turning higher, Again, this is a daily chart, so you can actually go down because it's going to be too long and too late. So I like to take this thing down and look at it from a 4-hour standpoint. Okay, it's still same, but it's starting to flatten. Go down to a 2-hour standpoint. It's flattening some more, going down to an hourly standpoint, and you can see likely we broke out. And if you notice, the market changed character that day, and that was yesterday. So bear that in mind, that I think we might be putting in a short-term bottom from the market. Doesn't mean it's going to last. It just means that there's short-term target here that may be a tradable bounce for a couple hundred points, but it'll give you a chance to position and lighten up your position sizing in that lift, and then be able to position yourself for some short trades, which I will share over time. So the indicators that I have on here, you don't have all these. This is part of my IP. Some of the stuff we offer as part of the subscription. Some of it I just keep for little old me. And I think it's telling us a good story here. So anyway, I will let you guys go, and I will see you tomorrow. And good luck to us next 2 days. And hopefully the Fed won't be as hawkish as the market indicates they will be, and we should get a nice bounce here. It'll be a bounce that you probably should sell into. Thanks for listening. Bye-bye.